The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX like we usually do. And then we're going to have a new segment today that I'm going to introduce you to in just a few minutes. I'm going to do it every Friday for a while just to see how it works and whether you like it or not. But as you can see, the DAX has been under some pressure. Mario Draghi said that things are going to be dragging over in Europe for quite a while, so that's what's pushing the markets down. At least that's what it appears this morning, but that's still a bit early. If we take a look at the FTSE, you can also see that this is the 60-minute chart, of course, and you'll be able to see that we've been heading down also with big gap down too in the FTSE, which is not a good thing. Of course, being Friday in a down week, it's probably going to close lower today, but we don't really know for sure. We'll take a look at that German Bund that we were looking at. If you'll notice here, the only thing that I'm worried about here about this German Bund is I don't know if they have these futures like we do, where we switch from March to June. So I'm not really sure of that. I wouldn't bet my last 2 cents on that. So let's just keep it in mind. It might be right, it might not be. I don't know. All I know is that the bonds this morning hit that 146.06. That was a 78% retracement of the high that we made 2 weeks ago. So that should be some type of resistance. So far it stopped it, but it's neither here nor there. Regarding the gold, we were looking for a bottom in the gold. We've now had a pretty good rally. We now came off one half of a harmonic number, 17 points from that 1280 level. 1281 takes you up here to 1299. That's, I believe we're around 1299, 1300 right now. But we could easily get to 1308 today, folks, because that's the 382 level. And that would be another level we'd be looking at. But that 1299 to 1300 level should be some type of at least some resistance, given the fact that it's the first target objective of long gold, if you were fortunate enough to be long gold, and I know some of the folks here in the room was. Now here's the new section I'm going to have, folks. This is the artificial intelligence program that I've worked on for a few years, and just wanted to show you what this does is it predicts with a pretty good accuracy, usually in the area of about 75%, the key trading times of the day. Now, as you can see here, the key time of the day today is 10:15 New York time. That's the time you want to look at, not 11:15, not 12:15, not 9:15, but 10:15. And you notice it's got a little window there of about 20 minutes. So you should be starting down or up. See, if you're coming down really hard into that, that could be a pretty significant bottom, and you could have a rally. The good part about it is it's very accurate, but you only have to wait 20 minutes, because if it's not working, and if it's not working, that means that you're probably going a whole lot lower or higher. So just it's a very good tool for intraday trading, and the timing of it is very, very good. It's just it's just really very important. That Mr. Bill is pointing out that Tim Bost is talking about 1228 from our friend Tim Bost. So mine happens to be 10:15. Mine's not based on any astrology, folks. It's based on past work. This forecast was done 2 days in advance, and so I have a pretty good idea of what I think is going to happen. But we're going to do it every Friday for a while just to see what it's like, because artificial intelligence is coming into the forefront now, and people are talking about it. So we'll keep a close look on it. The big thing that's happened over this weekend, this whole week, from my perspective, is I want to bring it up here and show you. If you remember when we started this week, we talked about the potential for this head and shoulders pattern in the weekly composite for the NASDAQ. You notice the high back in March, that red line that goes straight across. that was the equal side, head to shoulder, pretty much spot on. And you can see what we've done so far with this. We've had a outside week to the downside. That usually means, if you go back and look at the left shoulder, you see how far we came down. That means we would come down to about the 50% or 38% retracement on this, somewhere around 70, 100, 260, 900 in the NASDAQ if it was going to continue on. But there's a problem in the economy, folks, and it's shown by this particular group of stocks that we talk about all the time. This is one of the reasons why we were so bearish, way back in September and October, because this was lagging the market badly. And as you can see, this week has been not a very good week for the banking index. It's gotten hit very, very badly. The main stocks that we're looking at, of course, from Europe are Commerzbank and also Deutsche Bank. They're in a merger. That's like two arsonists figuring out which building they're going to go into. So I think Deutsche Bank is almost ready to make new lows below 6 or below 7. So that's not the ideal situation you want when you go into a merger. But we'll wait and see what happens. Now, I do want to share with you something here. I don't want to do that at the break. It's something that's from the Hang Seng market that's very interesting, but we need to watch it very, very closely. And since we're on the program, I'll just bring this up here. You can see that, let's just bring this up here for the gold this morning. We'll just see how we're doing here. This is the AI program. You notice that the market starts down at around 10 o'clock. So if you're interested in that, watch gold at 10 o'clock, and we'll see how that one unfolds. Let's look, if you remember that E-mini S&P that we were talking about yesterday, the importance of that 2734 level. We've now broken below that. That's the 61% retracement from February 7th. It's also the real key level here, though, folks, is the one at 2,700. That's where those old highs came in, and we tested them, 2,700. Going below 2,700 today, and that would really be a big down move. That would be extremely bearish. I mean, just extremely bearish if it were to do that, because that high we made up there at 28.18 was the 78% level of the whole move. You can see it. We hit it back in December, and then we hit it again. We took out that December high, folks, by a point, 1 point in the March S&P, and we'll be switching over to the June S&P here next Thursday. That'll be on the third. Let me see, the second Thursday. Yeah, let's see. Today's the 9th, isn't it? Yeah, no, it'll be on Thursday. That will be the 14th. That's when we switch over, I believe. The second Thursday of the month, they'll be rolling over. You should start trading the June now. That's the one that would be. It's getting more and more open interest, so we'll see if it keeps going. I don't know, Marshall, if it's going to be a flying Melinda or not, but there's a possibility of it, because there's still a lot of people that missed the market on the upside, and if they think they got in a little bit late, anything could happen. Do one thing at a time. That's just not. That's not part of our operandi to do this, is to figure out what we think is going to happen today. The key level today, we've already broken below it. That was 2734, and anything below, well, 34 points down in the S&P would be a big handle down. So we'll get back. I wanted to share with you some really interesting things on technical analysis that I think you'll like.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I'm going to walk you through this Hang Seng Index weekly and daily, just to give you an idea. If you don't think there's any use to technical analysis, and sometimes it doesn't work, of course, but take a look at this one. This is a major index, folks. Going back to 2009, you'll see that high with the yellow butterfly pattern that was there in August of 2010. I happened to be in Hong Kong at that time, and of course the chart was far more advanced on the left side than it is the right side, but I was fortunate enough to be interviewed by the Wall Street Journal's Eastern Edition, and I made a big prediction that the Hang Seng was topping and was going to drop at least 30%. It dropped a little bit more than that, but it was really it was a similar type chart, but we had more data in it at that time. But you'll notice when it came down, you notice those black lines, those dark black lines from 2010, 2011. Look what happened in 2015, 2016. Exactly the same correction. Look what happened in 2018 and 2019. Exactly the same correction. Look at the cycle high. If you look at that dark black line there in 2011, that designates the 61% retracement from 2009 and 2009. It also shows you that the time down was equal. In other words, from the time of the move up to the time of the moon down was equal. If you move that over to 2015, 2016, you'll see that that was equal also. Now, when we got to this past time that we were back in November, we actually we made it a little bit faster, but we were setting exactly at a 78% retracement of the low from 2017 and a 50% retracement from the low in 2016. Now we bottomed earlier in the Hang Seng. It bottomed in November, made a double bottom in December, and then had the really good rally. But look at the cycle highs, folks. This is really amazing. There's a 44-week cycle high, as you can see. It lines up really naturally. There were 3 of them in there. They've just been just as near perfect as you can possibly be, and you can see the butterflies and the Gartley patterns in between. I mean, it's really amazing how well it really works. I mean, on many of these charts, it does look pretty good, but this one happens to be just absolutely perfect. And if we blow it up just a little bit and take a look at the daily, the important thing to realize here is what's happened this week, because this week after hitting that 61% retracement, as you can see from May, look what we did. We gapped down big time. We're down 500 points today, folks, in the Hang Seng. That's a breakaway gap to the downside, it looks like to me, after hitting that 1.618 expansion this week, and also the 61% retracement, and we hit the 50% retracement from the high that we had way back in January of last year. So that could be multiple problems here, and the way it started, it certainly appears that there's something not right here in River City. So if it's starting to happen in Asia, maybe we'll have a little bit of a problem over here. I don't know, but these are two beautiful charts. I really recommend that you go back and look at them yourself because it's got a lot of information in it. It shows you the importance of technical analysis, and it gives you a really good idea of, when you're at real critical levels. And that's all it is. It's a guideline. There's nothing more, nothing less. You can't do anything more than that. So let's keep that in mind as we're looking at some of these currencies. Big time currency, folks. We had a big break in the euro. We've broken below that key level of 112. We've held above it so far today, but on the longer term picture, we got a lot of work to do over the weekend because we've had a tremendous move in the U.S. dollar here. And also move down in the euro. It's at critical level. We've broken through the critical levels. The $64 question is this going to be a joke or a fake out or something like that? I don't know. But look where we are here with this euro as of yesterday afternoon. This is the long-term weekly contract. If you'll notice here that we've broken down below all the lows that we've had. The 61% retracement came in at 112.10. This morning with the report, we got up to 112.40, rallied 50 pips off that bottom that we made. That's about all you usually get is 40 to 50 pips if it's bearish, and maybe it turns from here. Maybe this is a fake out. I'm not sure, but it certainly has all the earmarks that it wants to move lower, but maybe it's a fake out. I don't know. You have to wait because if it doesn't close badly today and closes really strong, say above 112.90 or something like that, then I would say, then this maybe was just a fake out. But we've got the weekend to decide whether we want to do that. We've had some big moves, of course. The British pound, the Australian dollar, all of those are getting very, very close to our price objectives. The British pound, I believe now, is only about 60 pips away from the profit objective we were looking for. That was down around 130.10. I saw 130.60 early this morning. I don't know what happened after the report. The Australian dollar is still heading towards the target that we've been waiting for. That's just a little bit lower, right below that 70 level, and we've come close to that, but it hasn't quite taken it out yet. So many of these are in the last, and this is going to be interesting, of course, here in the Australian dollars, because this could be the first ABCD correction in a new bull market. And the only reason I say that is the fact that that move that we had on January the 3rd, when the Japanese banks robbed everybody with their fat-fingered heirs, if that's what they want to call them, that is what you're looking at is a possible first ABCD of a bull market. This thing has been bearish, folks, for several years, so it wouldn't be unusual to see a turn here in the Australian dollar if in fact it does happen. But we needed to get it down to that 69.50 level. That would be the area that you would be watching it from for sure. That's really what you're keeping an eye on. If you have any questions, folks, the number is 877-927-6684, and I would be really happy to answer them if you have any questions. And if I don't have the answer, I'll make something up. So we'll have something to work on if nothing else. Okay, here is an update on the Australian dollar. Let's just get this up here. It's a little bit lower yet this morning, but we are heading down to that 69.50 level in the Australia again. That number is 877-927-6648. The offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Area code 19147. All right. Someone's asked a question. Hold on just a second, and I'll get it up here so we can take a look at it. That is the Dow Jones Industrials. It's not up to date, but I will get it up to, this is where we were as of Friday, and of course we've dropped a considerable amount this week, so we are a little bit below this 78% level by quite a bit. We've had a pretty good sell-off, so that's just telling us that we're headed down a little bit, but so far so good. Who knows? Folks, when you hear about the political stuff, I don't factor any of that stuff into these things. I really don't look at that at all. But Bob is from Spokane is talking about the support in the grains. Wheat has gone down so far. It's it's about the price of sawdust on a country and western floor of a bar. But we're still looking for this potential bottom in the grains, but it hasn't happened yet. So we have to be patient. There's no pattern here to verify that we're at a bottom. So you got to be careful. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of the British pound on a daily basis. We've had a request, so we might as well take a quick look at it here. You'll notice that we've had several ABCD patterns on the way up. The last one gave us a really good chance to get short up there at that 133.30 level. The covering on that is right around 130.10. We're trading at 130.50 right now. We're very, very close. What we want to be watching, you'll notice the high that we made back here on the 26th of February. We've now, you notice how here we are into the 8th of March. We're down 11 days now. well, that's 11 calendar days. We're down 8 trading days. If you'll notice the drop that we had from January 27th into February 11th, that took 3 weeks. I mean, that was down quite a bit. So we could equal that, and that would take it a little bit lower. But frankly, as we get down to that 130 level, that's going to be right near the high that we made back in January. In fact, it's exactly it. So that would be an area which could be some pretty strong support. This is what our profit objective is, and we're still holding on to that. It looks like it still would be pretty good. The Canadian dollar's working relatively well, and of course the euro continues to move lower, which we think we're going to see the lower close below 112 today. And when the people look at their charts overnight and see the value of what the U.S. dollar looks like, it's going to be very, very interesting. I did have a chart prepared for the U.S. dollar, but for the life of me, and I say again, for the life of me, they disappear. And I think part of the problem is that I just put too much stuff up here, and it, because I'm trying to fill up the time to give you some really good ideas. And believe it or not, looking good, Billy Ray, feeling good, Lewis. Shut the front door and raise the rent. I found it. Here's the U.S. dollar index. You can see we've broken out above the high that we made back in November. We actually closed above there. We're trading right at it right now. You can see the double ABCD patterns up there between 98.25 and 99. This has broken the head and shoulders pattern on the weekly chart for the U.S. dollar. I'll cover that in the newsletter over the weekend, but we've certainly broken above that. This is very powerful. Just a small ABCD here, see, because last Thursday we were making a perfect Gartley down there at 95.75, and that the ABCD on that takes you at least to 98.25. So this thing, it's got legs, and it's got a lot of power here. I mean, look at that range yesterday. There's nothing negative about that puppy. So keep an eye on that. What that means longer time, I really don't know. Now the bonds hit a 78% level this morning, Maria. I don't know if you saw that or not at the 146.06 level. I believe Mr. Z was talking about that yesterday, but it's very interesting that it should be going straight up given the fact that the dollar is so very strong, because that means our interest rates are going to be going higher, but we'll see. Okay. All right. Let's see. There you go. Let's just not worry too much about that. Maria, you're doing a great job, dear. You just keep up the good work. You had a beautiful trade in that gold yesterday, and I think everybody should hear the sound of one hand clapping here in the room. But you do a great job, Maria. We really appreciate it. And everybody in the room does a good job. You post some really great information, and we've got David White in there, who's the Mr. Google of the internet. He knows all this stuff, and he can post it in a heartbeat, which is really good. He posted today the Paul Tudor's Jones's rules: lose your opinion instead of your money. Never average your losers. That's number one, folks. That's the dumbest thing you can do. Never trade in situations where you don't have control. That comes from an old movie, Knock on Any Door, by John Derrick, and that's where the motto for the Navy SEALs comes from: live fast, love hard, die young, and make a good-looking corpse. And that the detective, I can't remember his name, John Derrick, said, I never walk into a room unless I can see two ways out. So that's another one. If you don't have a position that you're losing in, it makes you uncomfortable, just get out. When in doubt, get out. That was one of W.D. Gann's favorites. Don't be concerned about what you're in, your position. Don't be concerned about your winners. Be concerned about your losers. The losers is where you can control yourself. And I like this last one there, second to the last, is every day I assume every position I have is wrong. That makes you thinking in terms of defense, and that's what you're supposed to be doing. And don't even have an ego, because the old man with the sickle, if you got an ego in this business, boy, he's looking for you all the time. So just take it easy. Just keep your positions manageable, and you should be just fine. Well, just fine. So we'll see. Okay. We want to get to the futures markets here. We've had a question about this natural gas again. We haven't been able to get much of a sell-off yet, but the long-term picture in this natural gas, folks, is really something that we need to take a liking to, because there's a chance here this could be a substantial move. Even after the terrible winter we had, the market had that huge $2 a cubic foot, and then it backed all the way off. So it's going to be interesting what's going to happen to it as it moves through the other part of this. Now, we're getting ready. We're in the starting now of corn. As soon as that weather starts to warm up a little bit and dry out a little bit in the Midwest, you're going to start to see the farmers in there planting their corn. Here's the one we want to be watching, folks. As you can see here, this is the Christmas corn. There should be some support there at some 388 level, so we're watching that very, very closely. If it breaks below that, there could be another 10 or 15% break, but we're still going to be watching for these grains because we've had 4 years without a bad crop, and believe me, this doesn't happen very often. So, you have to be able to think about the possibility might be a little bit different this year. What we're doing is we're waiting for that pattern to complete. We tried the wheat, that didn't work, and we had a nice bean meal trade that worked okay for about 4 days, made a little profit, and the oil did very well. Soybean oil did very well, but other than that, there hasn't been anything really jumping out at you yet in the grains, but they will be. They're preparing. They're getting ready to get these patterns moving. So we're watching very, very closely for sure. No question about it. Someone's asked a question about Tesla. Folks, I don't know anything about those stocks. All I know is that Tesla has more of a downward bias than an upward bias. That's basically all I can tell you. The other thing about stocks is the FANG stocks have not done very well in this rally. I mean, they haven't even come anywhere close to retracement numbers or anything. So that's another negative sign along with the market. But the three most negative signs in the market, folks, number one, the head and shoulders pattern in the composite for the NASDAQ. That's number one. Number two is the weakness in the banking index, as you can see that we talked about earlier this morning. Number three, the strong resistance at 2818 in the S&P 500. And then finally, if you were to take a look at the Dow Jones Transportations, that is got to be one of the weakest things. It's been down, I believe today, I don't know if it's down today, but it's been down 11 days in a row, and you'll see this pattern. This is a textbook pattern in the transportations, the 135 pattern to the downside, each of the ratios lining up perfectly, times lined up. I mean, and look at the move down. This was as of Friday. You can see how much we've come down this week, so it looks bad. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're going to take a look at the FANG stocks. I started out with Apple. You see Apple's made a 382 retracement from the high that we made earlier in the year when it was trading as a $1 trillion company. The next one we're going to look at, of course, is our good friend, Mr. Google. You'll see Google up here. We did make a 61% retracement last week. Actually, it was on Monday. We sold off quite a bit from that level. The next one, the key here, folks, just give me 2 seconds here. Look at Google here with the 135 pattern. Do you remember the one we just saw with the Dow Jones Transportation? This is an awesome pattern, folks. You're trading with the trend. It gives you targets to the downside from cycle 1 to cycle 3 to cycle 5 is equal. They're all ratios on the Fibonacci scale. I mean, that's mother, God, and country. That's what we've had in the transportation. That's why this thing looks so darn bearish. So sort of keep an eye on that. Let's look at the book, the Facebook, and it is holding up relatively well. Hold on, just give me a second here, and we'll be able to see it. Is this up to date? Yeah, we're up to date here. Hold on 1 second. And here's Facebook. Also, you'll notice what Facebook did. Made a 50% retracement from the high where we had the big island reversal. And notice the 135 pattern again. Do you see the 135 pattern during August, September? Exactly like in Google, exactly like in the transportation. That's the pattern from Roy Longstreet and his son Bill. That's a beautiful pattern. It forces you to trade with the trend. You got lower tops, lower bottoms, bada bing, bada boom, on the way down, as they say. And now we got the big Guahili is the Amazon, which will be next. But first, we have to cover the flicks. We want to get Netflix up here because it's actually been the stronger up until this past week. It's been the stronger of the group, but let's get it up here and take a look at it. And you notice now we're down below the lows of the last 2 weeks in Netflix. That's not a good sign because that's been the leader. And then we look at Amazon here again. Look what's happened to Amazon now. We are now breaking down really badly in the Amazon, and it looks like we're going to get down to that level a whole lot lower. So that's what the FANG stocks look like, folks. And you know they've been the leaders. The leaders are not leading anymore, and that's not a good sign, and that's another reason why to think that the market might be just a little bit overbought. Let's take a quick look here and take a look at what we're doing as far as that little artificial intelligence thing we were looking at this morning with the S&P. We want to see where we are here because, something's happened to the old computer. It is not doing what it's supposed to be doing. Okay, it's kicking in gear here. Give me 1 second here. We'll update this so you folks can take a look at it. And this is in action. So hold on just a second. All I have to do is to get the U.S. session. There we go. This is going to be okay. Here we are. All right, there's where we are. Okay, now remember it's 10:15, folks. You see we've come down. We've bounced around here a little bit, but pay attention to this 10:15 time frame. Let's get it up here. Remember, this doesn't yeah, Marshall, you're absolutely right. They probably are leading. You know, they're leading them down. I never thought of it that way. Very good, Marshall. That's why you get the big bucks. Here's what you're looking for. Watch between 10:15 and 10:30. If there's a bottom there, this will pick it up. Now, there's two things could happen. It could bottom there and rally the rest of the day, which is certainly possible. The other thing is it could look like it's bottoming between 10 and 10:30, but about 11 o'clock, if this thing is making new lows after 11 o'clock, after making some type of bottom at 10 or 10:30, it's not going anywhere but down. It'll be down the last 3.5 hours of the day. That means it's a really strong trending market. But keep in mind, just quickly look at this, folks. Look at the bottom that happened at 8:30. It was right on. Look at the bottom at 9 o'clock. It was right on a key time of the day. So you got to watch this time frame between 10 and 30. It's worth it's worth taking a look at. We'll see if that's going to be right or not. I don't know, but that's what it looks like for me. Keep an eye on it. That's all I can say. Just remember, in the land of the blind, the one-eyed man is king, and that's a key to remember, because if you've only got one eye and everybody else is blind, you're way ahead of everybody else. Let me get these charts set up, and then we will get back to the next question. Boy, these bonds have sold off almost a full point. That's pretty good. That's great. All right, let's move on here. The gold's selling off a bit. That was at least supposed to come down a little bit, so we'll see if that's going to be right. All right, let's move on to the next question someone had, and that is about the coffee. Coffee not look good, folks. We're down near those lows again, and it looks like we're ready to break through. I'm not sure whether we did or not. We had a really nice $1,000 profit in that, and we ended up putting our stop at break even, and that's what's happened, and that's the way it goes. But sometimes you don't know where the direction this is going to be, up or down. We never know that. But look at that 1.27 level. We're down there again, folks, down at that 96 and change level. Breaking below that, the only other number that's down there is 94. You can see that 1.618 expansion down there at 94. As we update these charts over the weekend for the futures part of the newsletter, we'll be able to look at it a little better. I might be able to take a little gander at it at that level, but right now it just doesn't have the upside momentum to keep it going. It really had a chance once it got above $100, and once it didn't do that, it just rolled right back down, and it told you that there's still more selling coming in, much like we're seeing in some of the other grains. It appears that this tariff thing with China might not be a good deal after all. I don't know what's happening with that, but I'm just looking at the prices, and we'll see. Same thing with cocoa. Once the cocoa broke down below that 2140, that was another one that you had to be really careful about. We're at that 2140 now in the cocoa, but we still want to be able to look at. Yes, Ruby, I will cover the sugar next. Absolutely. Remember, the sugar had to hold 1265, and sugar tried it, but it's not doing it. I saw 1216 this morning, and it looks like we're heading down to that 1185 level, where you might want to look at it a little bit later. But we've broken. In fact, we're down to this level again. We hit 1262 on Friday. We rallied up to 13 and change, and we're now breaking down. We're at 1215 this morning, so you can see we are heading down to that good support level that we thought we might get to, which is around 1185 in sugar the sweet. So that's another one you want to pay attention to. What you'd like to see is to take out the January lows and not go anywhere. In other words, it shows that support is still there, and then we'll see if the market is moving. Merrill Lynch came out with another forecast for their commodities, and they have revised their bullish session for commodities, and they're becoming more and more bearish, which is, you'd love to see that. So that could be a good thing too, because it's not the same thing that we have. Oh, by the way, today is Happy Women's Day. Make sure that without her, there is no hero. It's always zero, folks. All right. Okay. A little family joke here, folks. Anyway, let's move on. Oh, by the way, there's something really exciting going on in horse racing. Folks, Santa Anita Racetrack had to close because the horses have been dying. They've lost 25 thoroughbred horses since December. That's almost a mathematical impossibility, but it's a really terrible thing that's going on over there. They don't know what the problem is. The track seems to be okay, but it's very scary. Hey, we'll be right back, folks. This is the end of the week. Let's have some fun. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are going to be watching very closely the 3 things that we talked about earlier in the show. The negativity in the Dow Jones Transportation chart, that 135 pattern. We saw it over and over this morning as we focused on Google and Apple and Facebook, seeing the same pattern. We're also looking at that head and shoulders pattern that we had in the NASDAQ. Absolutely perfect. Now we're having an outside week to the downside. Not a good sign. And then finally, the banking index, that chart looks just really not very good at all. And whether that means anything, we'll have to wait and see, but it's following along the program. We're very oversold in the Dow Jones Transportation. I don't believe, they said it was 20 years since the Dow Jones Transportation had 10 down days. Now, I didn't have time to check that, So I just repeated what I heard on Bloomberg this morning, that it was down 10 days, and I believe today would be the 11th day. If it's down, I haven't double checked if it is down yet today, but let's just take a quick look and see if it is. And let's get this little daily up here. We'll take a quick look here. Yep, it is down today too. In fact, it gapped down. That's not a good sign. So, but we're down 10 days in a row, and very, very oversold. So we're due for a rally of that one that might pull the market up a bit. So we'll see. Anyway, that's what we're watching here. The bonds have strong resistance at that 78% level, which was 146.06. We're down about 3/4 of a point in that. Remember the German Bund chart that we looked at? Extremely bearish, i.e. higher bonds, higher notes in Germany. Whether that comes across to us or not, we'll have to wait and see, but that's what we're watching this morning very, very closely. The key time to watch, of course, is 10:30 in the E-mini S&P. If you're making a high at that time, then I would suggest you might want to take a little gander. Maybe there could be a short. Remember, we had a high last night at 54, so if we were making a high, let's just do this quickly here. Watch this number, folks, of 27.44. Who loves you, baby? Make sure you're here to Monday, folks. We got something really special planned, so live every day in an attitude of gratitude, and may God bless.